Good evening, traders. This is Byoa from London. It's Tuesday, the 2nd of August. And the currency pair I'm looking at now is the Euro Australian dollar. Euro pair on the daily, and my bias is to the downside for the probably next couple of weeks or next couple of days. And my analysis is basically based on an harmonic pattern. What I've identified on this the daily chart is a possible butterfly pattern forming up since the beginning of this year, around January 06. And at the moment we've got, which is literally a 5-point structure, and at the moment we've got 4 points confirmed. So I'm just looking for price to move further downwards to confirm the last point, which is the D point. So we go X, A, B, C, and this should ideally end around this area in the next couple of weeks. Now the butterfly pattern is literally a 5-point structure, where point B is a 78.6 retracement of the XA leg, and you've got the support zone defined by this butterfly pattern, which is 3 different price levels. That's the 127% extension of the AB leg projected from the C point. That's the lower boundary of that support zone. Then you've got 127% extension of the XA leg as the upper boundary, and 224 Fibonacci extension of the BC leg, and that's the lower boundary. So that's what I've identified on this daily chart. So my plan is to find a way to get to go short, find a suitable price level to go short, and target this zone literally between 12426 and 12548. Now in terms of entry level, if we move on to a lower chart, which is the 2 charts, what we have on here is that sharp drop we had last week is really this drop here, this large drop we had last week is being completely retraced at the moment, and that retracement is forming a pattern on the 2-hour chart, and that pattern is a Gatlick pattern. Let me just zoom in. So that's the drop from this point X. If I zoom in, you can see what I'm talking about. So this green line is the B point on the daily chart. Now on the 2-hour chart, this was the last drop, the sharp drop. And you can see the retracement forming a nice Gatlick pattern, where the point B is approximately 61.8 retracement of the XA leg. Again, this is a 5-point structure. It's X, A, B, C, D, and you've got 3 levels, which is the resistance zone where D should end. In the middle of that is the 17% retracement of the XA leg. The lower boundary is the 127% extension of the BC leg. Then you've got 127 extension of the AB leg, which has now been projected from the C point right there. So you've got that zone between 13182 and 13196 is where point D should ideally end. So at the moment, price is at that zone, and I'm looking for price to literally consolidate within this zone and move and fall from that zone. So it should basically consolidate and move to the downside. So I'm looking to go short within this resistance zone defined by the Gatlick pattern. My target is the support zone defined on the daily by a butterfly pattern. But this possible butterfly pattern. So that's the plan. So in terms of entry levels, you can actually go short right now, but since you can see this D point is literally below this congestion zone, so price might actually trade into the congestion zone before reversing. So obviously with the Gatlick pattern, the ideal stop loss should be above point X, which is the beginning of the pattern. So I'll have my stop loss at just around this area of this upper area of the previous congestion. So maybe that's 13300 or 133275. I have my stop loss, and target, like I said before, is on the daily. If I scroll down, I should be able to see it here. So target is around 12400 or around 1 to 450 to 1 to 550. So that's gonna be a trade for a medium term trade. Probably basically take a couple of weeks or days before we hit the target. And basically I'm watching price within this zone, just between this green line, which is 1323 and 1312. So if price shows signs of exhaustion, at the moment it's rallying past the resistance zone, but that could be completely retraced. Who knows? So if I see a sign of price exhaustion within this zone as it approach this contention zone, then I want to go short, and I have my stop loss at 13300, and profit target is way below there. Than is 12426. So that's the plan for this pair. I think it's gonna require patience, because the potential is downward potential is quite huge in terms of the number of pips that could be made. But at the same time, you need to manage this trade accordingly and using stop loss that are probably at 13300. So that's a pretty wide stop loss, but the profit potential is huge as well. So that's clearly more than 2 to 1 reward to risk ratio. In terms of managing the trade, obviously when price approach the B point, then you want to basically trail your stop, and if price break through the C point there, then we've got more room to the downside. Because if I zoom in, there's nothing there. And if you check on the daily, when price break through here, this around this point, then takes out hex, we've got basically here there, so there's more room to the downside. So if price managed to close below the 88.6 retracement of the AD leg, let me just get that price level out, then you know there's more room to the downside. No, not that. The AD leg, if price managed to close below price approaches the B point, you want to throw your stop. 13180, you want to throw your stop. Then look for price to close below the next profit target will be the 1.303. Look for price to close below that. But if price ultimately close below the 88.6 retracement of the AD leg, which is around 12959 and 12960, then you know there's more room to the downside. So that will be all. So that will be all. Bias to the downside. Watch price action here and go short if you see signs of price exhaustion. Signs of price exhaustion, then stop level at 13300. So that'll be all. Thank you very much, and good luck with your trades.